The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien coming to you live from TFNN Tuesday morning, just after 9 a.m. Eastern Time. We got about 24 minutes to go until the start of trading, and economic numbers driving the action yet again. Markets accelerating higher on a missed PPI, showing not the inflation the market expected. To put it lightly, not exactly a jarring number. We'll get into it in a moment, but nonetheless, following the CPI number we had on Thursday, you see the spike this morning up to 4,050. That's a 5-minute chart right at 8:30. We get the number, and we trade up about 1% from where we were. We've given back some of that right now, but we're trading at 4,034. You're up 68 points in the futures right now. That's 1.7%. How about the NASDAQ 100? Up 2.7%. S&Ps right now, folks, are 7.6% ahead of where we were trading at Thursday morning, let alone coming off the lows that we've had recently. 7.6% we are trading at. That's 285 points above 3750, which was basically the close of action on Wednesday, coming into that CPI number on Thursday. Interesting that you got kind of the crypto slowdown into those economic numbers, right? Reverberating as it's going to across the board. Still, Bitcoin actually positive $700 this morning at 16,720. Interesting, it's holding up so well. That's my opinion on that one, man. But you got Cathie Wood in there buying some of the Bitcoin Trust. We'll get into that in a moment. Quite a discount she's getting if you think that it has a floor anywhere near where we are. Crude down about 82 cents. We're sitting at $85 right now. Gold spikes on that PPI number as well to 1791. We jump to notes and bonds. You're seeing higher price and lower yield right now. You're talking about the 10-year is up 19 ticks. We jump over and take a look at the yield as I pull it up. 3.79. We're now under 3.8%. And look at the run we've had, man. You're talking about a run of almost 3 full points from where we were. You were at 110 on Wednesday, and you're at 113 just a few minutes ago. We're trading right now at 112.23. The 10-year at 3.79%. The 30-year is up 27 ticks. And taking a look at the 30-year, let's take a look at this as we do. I've looked at this one on a long term. Just for some context here, if you've watched the program, you've seen this chart before. The trend line from basically the year 1999, 2000. Okay, you trade higher, you break through that trend line, you come back and you test it in August, and then you accelerate lower. Yeah, we're getting quite a bounce here, folks. But boy, this is it's been quite a one-way trip. Really, since August of 21, we put this thing back on a 3-year weekly just to see in context again. I mean, look at the weekly, man. That's the 30-year. What do we get? 3, 6, 9, 12 straight red bars, and all we've done is claw back the last red bar. So keep that context important. I mean, if you're looking at price action on the 30-year, okay, and I don't think this is the case. I mean, these are some pretty decent economic numbers here. There can always be surprises in the future, but these numbers definitely are meaning something to a degree, because we'll get into them in a moment. Even on a month-over-month, we'll talk to our man Kevin Hincks coming up after the break. The 382, folks, is still almost 4 points higher on the 30-year, and the 30-year can move dramatically. But when you talk about the 10-year, let's look at it in the same way for price action. The 10-year still got to get to about 114 almost, and you're at 112.25. And keeping in mind, let's take that Fibonacci off the channel line. The moves have just been so dramatic, man. Where that channel line rests, okay, maybe it's something like this. But as you can see, still pretty well defined within a channel line to the downside, talking about lower price, higher yield. We'll see where we go from here. But nonetheless, let's jump into, you know what? Let's look at the dollar first before we get into the actual numbers this morning, because that's a pretty decisive break, folks. That channel line no longer intact, to say the least. From 115 to 105, man, you put this thing on a 15-minute, and you're talking about from 111 to 105 almost from the period of Wednesday to this morning. Surprised maybe gold not catching a little bit more of a bid with everything going on. We jump over to the yen. We got the yen right now trading at 138. You hit 137. You talk about breaking a channel line in the end, same thing. From 152 almost, we're trading at 138. You're back to where you were in July in the end, just like that in a matter of a couple weeks practically. All right, let's jump over to the headlines and pull it up as I search for the window that I had up here. And that's the GBTC article. We'll talk about that in a moment. But let me pull up the wholesale prices because there's a couple things I wanted to cherry pick that I was posting in the den here. So the headline number that you're going to see, folks, is the PPI rose 0.2% in October for wholesale prices. The market was looking for 0.4%. In any given month, a 0.1% deviation is probably not that much, right? But the market's really looking for anything right now. On the heels of the CPI, annualized, right? That's 2.4% versus 4.8. If you come in at 0.2%, that's 2.4 if you do 12 of those months versus 4.8. Somebody mentioned in the den earlier, and I think about it in a similar way. There's a lot of variance that can come in on a monthly basis when you're dealing about 0.2, 0.3. You know what's interesting is, right, is it comes in at 0.2. What was it? 0.2 what? Because was it 0.24 or was it 0.21? Or you get the point, right? There can be some variance. You don't even get all the decimal points. So we get wholesale rises, 0.2% for the month. But one of the things, a couple of things I was cherry picking, putting in the den today, excluding just food and energy, okay? Because they have here a couple things. Now, you can exclude food and energy and trader services, and it will rise 0.2% for the month and 5.4% for the year, okay? Again, back to the headline, 8% versus 8.4. So when you see that, right, and rightfully so in the den, somebody posted it as well, saying, man, PPI is still at 8%, right? And that is the backdrop of this. Don't pop the champagne just yet. You know, even though the market popping some champagne bottles this morning, up almost 2% on the heels of the CPI, the 8% number is a headline number that inflation has risen over the last 12 months, but the market already knew 11 of those months. Our man Kevin Hincks likes to say that. It's a great saying. Market already knew 11 months, folks. The only thing we didn't know is what happened the last month, okay? So don't get caught up in the headline numbers. The market already knew 11/12ths of that number. We just got the 1/12th left, the final month. But guess what? That final month comes in at 0.2% for the month. It comes in at 0.2% when you exclude food, energy, and trader services. And then this is the real part, okay? Two final points as we come into this break, and we'll talk to Kevin after the break. Excluding just food and energy, the index was flat on the month and up 6.7% on the year. Don't worry about the year. We already knew the year, okay? Excluding food and energy, the Fed likes the core number, okay, because they have difficulty controlling food and energy much more so with their rates. That's their words, not mine. Flat on the month. And then one significant contributor to the slowdown in inflation was a 0.1% decline in the services component of the index. That marked the first outright decline in the measure since November of 2020. So there's a lot to like in that report when you take a look at it from that angle. It is one data point. That is undeniable, folks, okay? Right now, we're 528 points off of the low in terms of where we were at 35.02. You're talking about quite an acceleration. You now do have some optimism priced in. I mean, one of the things about coming into that CPI number at 37.50, a lot of negativity. We're 300 points higher, just like that, folks, in a matter of a few days. So next month, market's going to have to live up to those increased above expectations. Stay tuned, folks. We'll be coming back talking to our man Kevin Hincks from TD Ameritrade Network. We'll be right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years years' experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We have the S&P futures up by 64 points right now. That's, up 64 points. That's 1.6% in the positive. The NASDAQ 100 up 2.5% right now, 292 points in the green. Let's jump over to our man, Kevin Hincks. Every trading day, folks, 12 noon Eastern time from the TD Ameritrade Network Fast Market. Your host, Kevin Hincks, Tom White, the whole team at TD Ameritrade Network, folks. Outstanding guest lineups. They break down the day's market action. They walk you through 3 hypothetical trade setups. And we got another data point this morning. Kevin, good morning.
Good morning, Tommy O'Brien. Yep, PPI came in very similar to what CPI did, right? Lower than the overall consensus. Still, we have inflation levels headline of 8% in the year-over-year headline number, 6.7% in the year-over-year excluding energy, the core, and 5.4%. with ex-food and energy and trade services. But, Tommy, the consensus were for about 0.5% higher in terms of the headline, 8.5 versus 8. The core, 7.2 versus 6.7. So the market likes the fact that you've got big movement, much like the CPI number last Thursday in terms of inflation at the producer level. Now, Tommy, I should warn your viewers that the reaction from the PPI usually is not as strong as some of the other inflation data points that we get during the month. Why? It's just my history that's what I've noticed. Could today change? Possibly. But right now, you've got the NASDAQ 2.5% higher to start the day, and you've got the dollar significantly lower. You've got yields significantly lower. So interesting start to the day. Great earnings and a great message out of Walmart. Not so great out of Home Depot, but again, a really good market day setting up here.
Yeah, Walmart, man. I was reading those numbers this morning, and I actually said to myself, just sitting in the office getting ready, wow, revenue just through the roof, man. And back to the PPI for a moment, and there's nothing like experience, Kevin. That's why we talk to you every morning. That's why I watch Fast Market, man, so we appreciate it. You've talked to us before, and we're getting so much economic data, and it's moving the market so much right now. And you've talked about kind of what are the most valuable data points, Kevin. I know PPI is somewhere in there, CPI is somewhere in there, non-farm payrolls is a big number. But for the viewers that haven't seen you go over that with me, would you just go through some of those data points? Because, boy, they're driving the market right now that you look at on a monthly basis in the market. Because first time I heard you say that, man, I was almost writing it down because they are so important right now.
Yeah, I'll do two things for you, Tommy. The 4 looks we get in inflation during the month are important too. PPI is one of them, but I say PPI is the distant fourth of the 4 looks at inflation we get. We get wages in non-farm payrolls. We get CPI data. We get the PCE data within income and outlays, and then we get the PPI data. So 4 good looks at inflation during a month. Now, the 6 big data points that I look at, Tommy, although we look at all the data, the 6 that are really important, you just named the number 1, non-farm payrolls and unemployment, right? Now, what's turned into a close second is CPI, right, that we look at. Then things like durable goods, retail sales that will get out tomorrow, personal income and outlays, Tommy, and then PPI as well is something we look at. So top 6, you can, depending on trends in the economy, you can look at, bring in a couple other ones. Sometimes consumer sentiment is an important number, consumer confidence everyone likes to look at. But, Tommy, it's non-farm payrolls, it's CPI, which has really become, if non-farm payrolls and unemployment is 1A, CPI has become 1B in terms of economic data. But those are the number 1, that top 6 that we look at. Tomorrow we'll get retail sales. So that'll be a really good look at the U.S. consumer, Tommy. So, yeah, those are the data points, the top tier that we look at.
And it's going to be interesting, man, because like I said, those and thank you for laying it out. And folks, we archive every show we do on our YouTube channel. If you missed it, if you didn't write it down, go back and check it out if you want to, because they are driving so much action, those numbers. The CPI, we saw it on Thursday, PPI today, retail sales, like you mentioned, tomorrow. And before you know it, Kevin, it's going to be the end of November, Thanksgiving, and we'll be coming into December numbers. Walmart. Depending on where you are right now, Kevin, in retail, right? I mean, Amazon, I read the numbers on Walmart today and joked to myself. I said, well, I guess that's where all the Amazon money is going because they don't have a revenue problem, to say the least. With that, we go forward. A big week of retail earnings, man. What are you guys talking about on Fast Market coming up today at 12?
These shows are easy to do, Tommy, because you're getting a really good look. So for today's show, we'll trade Target, we'll trade Lowe's, and we'll trade TJX. So another really good look at the U.S. consumer. After Home Depot's numbers, remember, Home Depot beat on earnings, Tommy, but it was a little different story than Walmart, right? Number of transactions fell 4.3%, but the customers spent 8.8% more. So we'll get a look and compare Lowe's to that. Then we'll get a look at Target. Remember, it was inventories, Tommy, that plagued Walmart and Target 2 quarters ago. Well, guess what? Inventory levels, they've done a great job of working through that at Walmart. That's another reason why the stock is up so much this morning. It's not only the numbers they put up in terms of groceries, but it's also, Tommy, inventories. They're through inventories down to first quarter, 32% inventories increased. That's why the stock sold off. Second quarter, 25%. Now 13% year-over-year growth in inventories, Tommy, a much more manageable number.
And it's pretty cool. They cleared through that inventory while they crushed it on revenue and beat on earnings on top of it, right? Because anybody can clear through the revenue, I guess, but are you going to be able to do it in a way where you can still make money and bring money to the top and the bottom line? And they did it, man. And yeah, always interesting when you go second, man. Target, they get to go second. Expectations increase. They're up about $1 today with the market, of course. No, excuse me, $4 up to $176, getting a pop on those Walmart numbers. Kevin, I appreciate it as always on a busy morning, man. We'll be watching at 12 o'clock today. And we'll talk to you tomorrow morning.
Thanks for having me on, Tommy. Have a great day.
Always a pleasure. Folks, tune in. You heard it. They're talking about 3 great stocks, and it is always interesting when you get to go second, right? Target, they watch Walmart. Boy, if you're in that C-suite, man, I hope they delivered, because if they didn't, they're going to pay the price tomorrow. I imagine they may have. Otherwise, they're just not executing, man, because Walmart, boy, they really got it done. And Kevin, he talked about a lot of the great numbers that they came out with. And let's just jump to some of them, man, as we come into this break, as we get into the opening bell. Revenue, I referenced it a couple times. They beat in 90 days by $5 billion. That is bonkers, man. Earnings, $1.50 versus $1.32. The news that did come out of here, as well as they had a $3.1 billion settlement for the opioid-related charges that go along with everything going on throughout that. So that is settled, which I'm sure investors like. On top of that, Kevin referenced the inventories. Inventory up 13% year over year, down from 26% in the second quarter and 32% in the first quarter, right? Huge numbers, man. Comp sales in the U.S., 8.2% excluding fuel. Expectation, 3.6. This is where I started to go, wow. Whoa. Expectation 3.6. They come in at 8.2 excluding fuel. The key metric includes sales from Walmart stores and clubs open. Comp sales for Sam's, 10% excluding fuel. Market was looking for 8.7. Just big numbers across the board. Now, going forward, not exactly going to be where those numbers are. For the holiday quarter, comp sales still rising 3%, okay, excluding fuel. Expectations, though, 3.5, so a little bit there, but the inventory probably a big one. Target got punished on that. We'll see how they do on their numbers. As Kevin mentioned, Lowe's is out as well. TJ Maxx, big week in retail. We'll be right back for the open, folks. Stay tuned. Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstad's Tiger Forex Report. Teddy Kegstad breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open, and you're looking at an S&P positive by 1.63%. The NASDAQ up more than 2.5% right now. You have the Dow up 297 points. That's up 0.9%, and the Russell is up 1.6%, pushing 1,900. Jumping back to commodities, crude at 85.10. Kevin mentioned as well the dollar index. Yeah, quite the pullback from 111 to to 106 in the dollar index there. You check out the gold contract. You could see that you'd think that maybe the gold would be a little bit higher with how the dollar has continued to pull back, because gold was trading at the end of Friday at 1770. And at the end of Friday, yeah, it's pretty close, I guess. Not at the end of Friday, you have the dollar index at about 106.30, so not that far off from where you were. As the markets hold up for at least the first couple minutes of trading, even catch a little bit of a bid. Check out the Russell pushing 1,900 on the open with the S&Ps at 65. Let's jump around to some of the FANG stocks before we jump around to all the news up there. Amazon, I mean, they got punished, man, on the downside when some of this was going on. They're higher today by about 4.9%, 5% we'll call it. Yeah, 4.98%. Amazon at 103.39. We jump over to the big dog Apple, up 2.6% right now. We jump over to Google shares, up 3.1%. Microsoft right now up 1.85%. Tesla shares catching a bid at 3.55%. Folks, I'll tell you, just from like an aside, okay? Not about the market, not about anything to do with politics. It's quite a reality show what's going on with Twitter right now, all right? It's a private company as far as I'm concerned. I'm just watching it from the sidelines like it's a reality show. If he wants to pay $44 billion to that company and he thinks that's the way to best manage it and that's going to be the best thing for investors in his company going forward, that's what he gets to do. The tough part that I don't get in this one is how Tesla shareholders haven't revolted yet. Because it seems like if your share price, okay, I think it was sometime back in April, right, that this all started. Now, the market's correlated, all right? The market's pulled back pretty dramatically. But you basically have Tesla trading at 50% of the price that it was trading at when Musk started this. He's literally said that he's sleeping in the Twitter headquarters, and he's doing that until he fixes everything. And meanwhile, just in the last 2 months, you've had Tesla lose over 35% of its value. I just don't get that one at all, folks, and how he's given that much latitude. And listen, he's a brilliant man. I wouldn't bet against his companies, but if I was an investor in Tesla, man, I would be scratching my head about how he's getting that done and not taking the flack for it as the company's pulled back much more than the market. And how's he going to fix it when he's just sleeping at the Twitter headquarters? You know, I don't get that one. It's a public company. It's a different conversation than the Twitter conversation. Anyway, it is what it is, right? Okay, let's get back to some of the stories that I have pulled up here. And this one's an interesting one in terms of far-reaching impact. Now, I do have some Amazon shares in a retirement account, folks, for full disclosure. I think it's a long-term play, especially where it was. Now, you're catching a bid today. But, boy, you know what? I'll see if I can find the article. There was an interesting read I read over the weekend. Who put it up? Somebody posted it in the den. Yeah, to whoever posted. I'll find whoever posted. It was an Anderson Horowitz article about the biggest company in the world. And what it was talking about is that the biggest company in the world has not been created yet, and it will be some type of company in healthcare, okay? A services company that would basically turn into the Amazon of healthcare or something like that, okay? Where it's absurd that we want anything in the world and we go on Amazon and we can find what we want. And there's no service like that if you want to go out there and find a doctor, find reviews, find the best price, do this, do that. There should be a platform or whatever it is, right? So that's the article. It's an interesting theoretical exercise of thinking about it in the longer term. And this one's interesting. So Amazon announces a new virtual healthcare service to help with allergies, acne, and hair loss. Okay, and what it allows is virtual care. 32 states to message clinicians through a secure portal to seek personalized treatments and prescriptions for common conditions. This is what most people need, right? They need like that small avenue to reach a doctor for something pretty simple, okay? You know, if you're really unhealthy, go see a doctor in person, right, for sure. But many times you can do something over virtual. And this is what they're beginning to focus on. Allergies is such a great example, man. I remember when I was a kid, I needed to get allergy medicine. I had horrible allergies as a child. Thankfully, I've grown out of them many long ago, and I did get shots for them when I was a child. But boy, I could barely even play sports in the spring. When the cars get covered in yellow, folks, I was just done. I couldn't. My eyes wouldn't stop watering. They wouldn't stop itching. My eyes wouldn't stop itching. That was the worst part. I couldn't get out of it. There was no way around it. And so I would go to the doctor. They'd give me everything, up to steroids, all that stuff in line. but it was always a pain in the butt. And it always made little sense. But guess what? The doctor wanted you to come in, because if you didn't come in, he didn't get paid, rightfully so. Okay, he's taking care of me for the year, whatever it is, but all he's doing is writing a script. But in theory, you're supposed to be seeing him, then he bills you, right? Then you get it. If he just writes it, it's not the same thing. I could have done this. There's millions of people like me. The kicker here is that you can't use your insurance yet, which is probably a big part of them getting this done. It does not accept insurance yet, but customers can then use the insurance to help pay for the medications prescribed by a licensed clinician through the platform. Those prescriptions may be filled at any pharmacy, but added at Amazon Pharmacy, it's also an option. And I guarantee they're going to try and make it as simple as possible to run you through the Amazon Pharmacy. So they can run that at a loss if they're running enough people through the Amazon Pharmacy for the people that they're prescribing things to. That's where the future's going, folks. And I'm going to try and find that Anderson Horowitz article. You know what? I'm not going to try it. It's going to go in the Tiger's Den, folks. And I'll pull up whoever put it in there, because I love thoughts like that, just thinking about the future and how that goes. And it makes sense, folks. All right? Technology will get there. It might take 10 or 20 years. But for a lot of what we do, you can do things over a computer, and that is where the future goes. And Amazon is hell-bent on getting it done, and Apple's hell-bent on getting it done, and the article goes over that a little bit as well. But that's the beginning of it, man, in 32 states. And you know what? If you're in dire, you don't have the time, and you can get it done, and it's a click of a button, and you pull it up, and you got a doctor there, and they bill you something affordable, right? And then it's done. Time is money, man, and a lot of people might go through that, and guess what? They're going to have insurance done in no time for that service, for sure. I don't even know why they started without insurance, right? Nonetheless, markets staying above that price in the open. We're positive, basically where we open right now, up 67 points. All right, let's jump around to what else we had going on. We talked about Walmart. We'll get into the Home Depot numbers. A little bit of a different story for sure. Revenue increased 6% to $38.87 billion. They make $424 versus $412 in there. Full year guidance ahead of the key holiday quarter. It expects diluted earnings per share mid-single digits, and expects comp store sales to grow about 3%, operating margin 15%, and not quite up to the expectations there. But we get to find out what Lowe's does after the market, tomorrow as well. So we got Home Depot and Walmart today. We get Lowe's and Target tomorrow is the action, which is why, Kevin, they'll be covering that today on Fast Market coming up. All right, jumping back to the market right now. Yeah, holding up pretty well. Be interesting to see where this day goes. Really surprised at Bitcoin holding up so well, man. 16,720. Folks, I say, if you have any money on exchanges, just get it off while the dominoes fall, because you don't know what's going to happen. And I'm actually shocked that Bitcoin's at 17,000, folks. It was at about 19,000 before all of this happened. You kidding me? But we'll talk a little bit about GBTC when we get back. The discount, and Kathy Wood, she's in there buying. Stay tuned, folks.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with a 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We got the S&P just hanging out right where we open right now at 67. You jump over to the VIX. You got a VIX 2374. Interesting action, folks, all right? You got the S&Ps right now up 68 points, and you got the VIX rising from where we were yesterday. Not usually the case right now. Maybe the market's saying, okay, hold on. I mean, we get the fact we have CPI. We get the fact we have PPI. But, folks, we just traded up 285 points in the matter of a few days, and maybe that's getting a little bit ahead of itself where it's time to pay a little bit of money for insurance. Could be what's happening in that market when you think about the insurance premiums, S&P futures, options, how that plays into whether VIX is priced. Doesn't normally be the case. You have the VIX actually rising as the market just takes off to the upside. All right, jumping around to Bitcoin again. As I mentioned, pretty surprising how things have held up for Bitcoin right now considering what has happened over the last 7 days, right? I was doing my program last Tuesday, folks, and I didn't know how to pronounce SBF's last name, whether it was Fried or Fried. How many times have you heard that name over the last 7 days? I was doing it last Tuesday, and Binance hadn't even come out yet and said that they were going to buy FTX. They hadn't even come out originally and said that. They came out and said that later in the day, and then it looked like at that point, okay, maybe he just crushed his opponent and he's going to get him on pennies on the dollar. And I think it was even by the end of the day, they had come out and said, no, we took a look at the books. It's probably not going to happen. But nonetheless, 7 days, and we're sitting at 17,000. When you're telling me last Tuesday you were at 20, there's no way that should be the case, folks, in that market. Okay? Now, you jump to the headlines you're going to see. So Cathie Wood buys the dip in Bitcoin fund as discount hits record. My dad was talking about this yesterday. GBTC. Okay, now GBTC is a trust. A trust does not have the ability to redeem shares. So it does not have the ability to make sure the net asset value stays within line of the shares, okay? The dislocation is a product of the fund structure, which doesn't allow for redemptions, meaning that shares can't be destroyed to keep pace with shifting demand. So as a result, you got a discount of like 42%. Yeah, let's see when that article is stated. 42%, there it is. That's the article from yesterday, okay? So, well, guess what? Maybe Cathie Wood, she reads some Bloomberg. She saw 42%. I'm sure she has a Bloomberg in her office in St. Petersburg, Florida. And, yeah, you're buying it at a discount. Doesn't mean that you're going to make any money, though, folks, because, boy, she just keeps stepping in it, man. If you think that she knows what's going on, she was out there buying Coinbase. Think somewhere in this day, maybe in this day, and yeah, it's up. But boy, I'd be careful in that one as well, folks, because the reasons speak for themselves. And let's jump around from there. Nonetheless, she was buying. She's going to live and die on that hill. How that hill goes, we will see from there. All right, what else do I got pulled up here in terms of talking about? Yeah, interesting how it all plays together, right? Everything going right suddenly, and At 37.50, folks, going into the CPI number, there's a very real argument to be made of going along that market because all the expectations, okay, were the fact that we had just priced in a move in the S&Ps from 4,300 down to 3,600, and we're still sitting at 3,700, chopping around at basically the lower consolidation area, even as the Fed might be moving off of the hiking cycle that it's been on. I mean, we're at price levels now that make things a little dicey, folks, sitting here, and it's all been factored in. And one of the things factored in is you have what? You have the Fed signaling that they don't need to go 75 anymore, and they're probably not going to go 75 after these two numbers, okay? We get retail sales tomorrow. We'll see how that goes. You have them signaling that is going to take place someplace in the future. Now, the argument could be made that they also signaled that it was going to be higher than the market expected, okay? But then you have China, and you have China really coming back with some strong headlines. They got a big plan for the real estate. They're going to ease COVID zero. But what I don't understand is that how that plays out, because you can't just snap your fingers and ease COVID zero unless you somehow have a plan to deal with the implications of trying to limit a virus with ways that almost nowhere else in the world has seen. Right? They get 10, 20 cases, folks, 100 cases. They lock down a city the size of the state of Florida, okay? You get 100 cases. They lock down a city the size of the state of Florida. So what's going to happen when there's no natural immunity and they open back up? As in, this one isn't out of the bag yet, okay? As in, the Fed isn't out of the bag yet. This isn't out of the bag yet. I think, how high do you get in this market risk-reward wise, where you really start seeing some risk to the downside? Well, folks, you start pushing 4,200, 4,300, you better watch out to the downside in this market, okay? Because we're going to get data points for the next month or two, and they better be in line, because if you get any surprises, you're going to get a recalibration of everything. And some of the analysts out there is talking about Morgan Stanley's Wilson. He's been the number one guy out there, and I kind of agree with a lot of what he puts out there, which is why I talk about it at least and share the thoughts, saying, man, we're not out of the woods, okay? You may see the Fed coming out of here, and we're getting quite a rally as the market considers that they are off their 75 hiking cycle. Maybe inflation gets under control. But when companies start having to revisit their earnings for the next fiscal year especially, you're going to see revisions. We didn't see them with Walmart, but Walmart has an exceptional point in terms of where they are, man. Walmart talked about they're seeing the change of trends even in the stores that they are in themselves in terms of what they're doing. Let's get some of the headlines here, because the quotes. Pocketbooks are stretched. This is the chief financial officer talking, okay? They're buying less expensive proteins, such as hot dogs and beans and peanut butter. Not what you want to hear, man, but instead of pricier meats, they're waiting for sales events to buy items like TVs. Pocketbooks are stretched. People have less discretionary income or less disposable income to spend on things, so they're looking for value. And they also, see if I can find the headline here, in terms of they are courting higher earners in a big way. Because it was surprising, and it makes sense, folks. No matter how much money you make right now, pocketbooks are stretched in a big way. Here we go. As inflation runs hot, the big box retailer has attracted higher income shoppers. And the point of all of this is, remember, is that Walmart is in a unique spot right now, man. Amazon, they're not the Walmart, all right? Amazon, they are convenient. They get the job done with delivery. Walmart is about value. You are pretty sure when you walk into a Walmart that you're getting the best price on a lot of things, okay? About 75% of its market share gains in food, which was a big part of how they beat, came from households that make more than $100,000 a year. The discounter saw that pattern in the previous quarter. So that is a trend when you think about it, right? Three-fourths of their market share gains are in households, and this is for groceries. Right? Walmart took a lot of flack for groceries, man, because they don't get the best reputation sometimes for the shopping experience. And when you talk about groceries, people can sometimes be fickle, especially about those meats. But guess what? Maybe you go somewhere for your meats, but when you go for your groceries, when you go for the items that are perishable, that are all the same, whether you buy them at Walmart, Publix, Target, or whatever it is, yeah, people are saving money even if you're making $100,000, folks, because when you're talking about 8 or 9% inflation, well, guess what? that $100,000, it's only buying about $90,000 worth of goods versus what it was buying a year ago if you're at 9% inflation. So Walmart, big numbers, retail sales, we'll find out. Not everybody in the same spot as Walmart. Stay tuned, folks. We'll be right back.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no cash or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got the markets holding up pretty well. We give back some of those gains on the open, but the S&P, folks, I almost chuckle, right? Up 1.5%. So, yeah, we give up 27 points, man. So pay attention as the trend has been lower prices. I mean, PPI, we came into the PPI at about 4,010, so we're only 10 points above on the PPI number at 4,020 right now. As I mentioned, VIX, pay attention to the VIX as well. Elevated levels pretty much from where we were this morning as you're sitting basically flat from the close yesterday. But remember, we came into that PPI number at an elevated level on the VIX as we give up some of those gains. NASDAQ up 2%, NASDAQ 100 that is, with the S&P up 1.3, Dow up about 0.8% right now. Jumping around to some of the articles I had pulled up, just talking about economists and what they're thinking. Inflation running even hotter through the next year. Fed seen raising rates further. One-year recession risk at 65% now. Inflation forecasts edge higher. The September survey is in black, okay? The October survey is in pink. And the November survey is in yellow. And no matter which one you're looking at, we're going up, folks, every single month. So we were talking about, and let's just stay with where we were in October versus November. This is the PCE price index next year, okay? 4.6% is what they're thinking in October. Bump it up to 4.9 over a month in terms of that number in the first quarter for the next year. Second quarter, we thought we were going to be at 3.4, 3.7. That's a huge increase, man, okay? 2.9, no such luck. We're still above 3% in the third quarter. And finally, they're looking for that PCE to get below that number in the fourth quarter. So you go from getting below 3% in the third quarter to now pushing that out to the fourth quarter. But pay attention, because those have to change too, folks. All we have is one CPI and one PPI number. We get retail sales tomorrow. We're going to get non-farm payrolls before you know it, and then we do it all again. And we're still sitting at these levels. You better watch out, because we got a lot of optimism right now with inflation going away, and hopefully that's the case, man. Well, we will find out. Thanks for starting your trading day with me, folks. Stay tuned. Basil Chapman's up next with the Tiger Technicians Hour. Then, of course, we got our man Steve Rhodes at 11 o'clock. Fast Market at 12. Larry Pesavento at 1. Dave White at 2. And Tom O'Brien, my dad, live from 3 till 4. Thanks so much, folks. Have a great Tuesday, folks. Stay tuned for Basil. He's up right now.